Hello, everyone. We are live. So, welcome to the third episode of the Market Call. This is a monthly format, as you may all know by now. So, each month we host the sharpest minds in the digital asset industry. My name is Aleksandar. I'm a research analyst at the Big Whale, your host, and my work revolves around Bitcoin and convergence between TradFi and DeFi. So I cover these topics quite extensively at the Big Whale. Joining me today are the dynamic duo André Dragosch from Head of Research at the Bitwise Europe, joining us from Frankfurt. Raphaël Bloch, co-founder and editor-chief at the Big Whale from New York City this time. And we have the fourth musketeer, Julian Liniger, CEO at Relai. So this is one of the largest Swiss Bitcoin-only fintechs offering Bitcoin services, and they recently obtained MiCA license and eclipsed $1 billion in volume, so a huge milestone. Before we head to the agenda, I just want to say two words about Big Whale, a quick word about the Big Whale. We are an independent, fully B2B leading digital asset media outlet in Europe. So if you want to check us out, of course, visit our web. Today, we're going to be a little bit more daring than last time. So we're going to be a little bit more punchy and a little bit more, we're going to make some bold predictions. So everything that we say here today should not be construed as a financial advice, and it should not be taken as a financial advice to limit our legal obligation, And also the agenda will be packed. As always, we're going to start with a discussion about the debasement trade, about Bitcoin and gold, also where the pair is headed, where the Bitcoin is headed, why is Bitcoin behaving like crap recently. Then we're going to progress to capital flows, more precisely ETF flows, and what's the status of Bitcoin adoption in Europe and Switzerland as well. And we're going to wrap up with the forward-looking view, as always, which is where we're going to discuss about Bitcoin dominance. Is there a room actually for altcoin season going into the second half of Q4 and also the end of the year? So, gentlemen, once again, welcome to the show, and a huge thank you to Bitwise for sponsoring this video. So last time we were live on the Market Call, right after it, a couple hours after, we'd experienced a flash crash that liquidated many traders across the world, and also it resulted in $20 billion in liquidations. So since then, markets haven't really fully recovered, and especially Bitcoin is trending down towards 50-week moving average, as many of us think, and many analysts around in the space think that this is like kind of a boundary between a bull run and also bear run. If we manage to record a couple of weekly close between below 50-week moving average, it could mark a beginning of the bear. But one thing is also what's very interesting is that Bitcoin underperformed gold for the entire year. If we take a glance here at Bitwise's latest research, we can see that Bitcoin underperformed gold in both like month-to-date performances, also year-to-date performances. Bitcoin underperformed gold yet again, S&P 500 and even Euro Stoxx 50 index. And Bitcoin gold pair is at 25, which is a support. My question, it's kind of a warm-up question for you, André, is do you believe that Bitcoin will recover going into the remainder of Q4, or maybe gold showed us and actually made an actual statement that, hey guys, I'm the superior store of value and you should invest in me in order for you to offset the monetary debasement?
So there are actually two questions, right? Yeah.
Yeah.
Good afternoon, everyone. So actually two questions, right? So the first question is whether we'll see a renewed outperformance of Bitcoin versus gold, and the second question was if gold's the better store of value better asset
Yeah.
than Bitcoin, right? But starting with the first question, I think a good way to think about Bitcoin and gold is both are part of this kind of debasement trade. They're different players on the same team, right? They're both hard assets. Gold is like the pre-1971 de facto reserve asset, right? In this old kind of regime during Bretton Woods. Like after 1971, the de facto reserve asset has been US Treasuries. But now we're moving away. We're in this kind of transition period. We're moving away from US Treasuries as being like the primary reserve asset to a kind of new world, right? to probably at the end of this roll, we'll probably move towards a hard money standard again. Question is, of course, will it be gold or will it be Bitcoin? But yeah, I think eventually will be Bitcoin because it's technologically superior than gold, right? It has better transferability, verifiability, divisibility, and so on. So it's technically superior. It's even scarce. It's absolutely scarce. 21 million coins. It's relatively scarce. Has like lower production rate than gold and so on. So it's in any kind of aspect, it's better than gold, right? And so I think eventually it will disrupt gold technologically. But that's probably like a very long-term time horizon. I think this year, as you rightly pointed out, it's been more like it's not been like our Bitcoin versus gold. It's been more like on the other hand, it's been U.S. Treasuries, right? It's like the inferior store of value, right? And so on the one hand, on the other hand, it's been Bitcoin and gold at the same time, right? As part of this debasement trade. So, and obviously money has been moving into gold, right? It's not been flowing out of gold. Like gold has outperformed massively. And so, but I think there will be a change in performance leadership. So in order to answer your first question, I think there will be a change in performance leadership going forward, which doesn't necessarily mean, okay, gold will perform negatively, but Bitcoin will just outperform because I think we'll be looking at a new business cycle upturn, especially in the US. I mean, I don't know whether you've seen these kind of analyses, but like the ISM manufacturing index, which is one of the key business cycle indicators for the US, right? The ISM manufacturing index has essentially been in a contraction for the past 3 years. It's the longest streak on record. And
Yeah.
these kind of business cycle indicators, they tend to mean revert. And there's so many signs that they will mean revert, that they will move up again, right? We're already seeing that forward-looking indicators, like survey-based indicators, are moving up. What's the reason? The reason is liquidity growth, right? We're still seeing this massive liquidity stimulus, and it's not coming from the US only, right? It's not only the Fed that's been cutting rates, right? It's a global kind of phenomenon. Like major central banks, like the ECB, like the Bank of England, like the Swiss National Bank, they've been cutting rates, right, over the past
Yeah.
12 months. And the degree, I think we had a very good chart in the macro report as well that showed like the aggregate amount, global amount of rate cuts over the past 12 months, and it's at par with like the post-subprime crisis level, of rate cuts. And so we have a massive amount of central bank stimulus. And these kind of rate cuts, they tend to lead the business cycle, right? And the
Yeah.
ISM manufacturing index and so on. And so they lead risk appetite. And coming back to Bitcoin versus gold, if you think of Bitcoin versus gold being a kind of risk on, risk off performance ratio, then if you believe that we'll enter like a renewed business cycle recovery and so on, renewed increase in risk appetite, then Bitcoin should naturally outperform. And there are like another set of indicators, which we also included in the report. So one is based on essentially sentiment, and the other is based on valuation. So if you look at the Z-score of this relative performance between Bitcoin and versus gold over the past 3 months, it's been at like -2, -3 standard deviations. It's like radically oversold, right?
Yeah.
Because Bitcoin underperformed so massively, right? And gold had
But
this kind of spike to the upside,
yeah.
right?
Can we then say that gold kind of started behaving like Bitcoin recently and that there is like a room for both assets to capture the kind of store of value market? We all know that like maybe we should change our mindset and stop comparing gold and Bitcoin as a competitors, but actually be like, okay, gold is rising. That means that it's increasing total addressable market for Bitcoin and that there is actually room for both assets to grow. What do you think about that?
Absolutely. I mean, we're already seeing this, right? I mean, Bitcoin has essentially been consolidating, but it's still positive for the year, right? But we've been seeing this, right? Money has been moving out of fiat assets like US Treasury bonds into hard assets this year, right? The debasement trade. We can also look at macro factors, which probably explain very well why Bitcoin has been lagging gold so far, but now I think they seem to converge in terms of like their sensitivities to macro. Because like the reason why I believe gold has been outperforming Bitcoin so much is it's been more sensitive to monetary policy this year, right? So that's the correct chart. So we calculate like the sensitivities of like Bitcoin, gold, but also other assets to macro factors, right? Global growth, monetary policy, US dollar, and Eurozone risk, and so on, right? And residual is what you can't explain with macro. And so gold on the right-hand side, you can see that for the major part of 2025, which is kind of this turquoise area, it's been more sensitive towards monetary policy. While Bitcoin has been mostly sensitive to global growth expectations, right? Gold has been leading Bitcoin because we have seen this massive monetary stimulus following the tariff shock, right, in April, and this massive uncertainty. So central banks started cutting rates, right? And gold has already started to price this in, right? This easy money era. And Bitcoin has been lagging because still uncertain, global growth uncertainty, tariff shock. It's super important to highlight that monetary policy leads global growth. So Bitcoin should naturally catch up at some point.
And I think that this is a really interesting point. It's not for sure gold versus Bitcoin. And don't you think, because we just broke the news, for example, about the National Swiss Bank, that is, I mean, of course, holding gold, but now has more exposure through strategy with Bitcoin. So would you say that maybe the central bank will show the right path with accumulating, I mean, gold, physical gold, and also accumulating Bitcoin?
I mean, MSCR is obviously like an indirect play on Bitcoin, right? Many investors, they've been constrained to buy Bitcoin ETPs, so they've chosen to buy MSCR as a proxy. You know, probably many Luxembourgish funds that can't buy ETPs, right? They're constrained from a regular point or a regulatory point of view. I think any Irish funds, they can't buy ETPs either. So the natural consequence is they buy Bitcoin proxies like MSCR, right? And we know it's probably one of the best Bitcoin indirect proxies, right? But to be fair, it's a different kind of asset because I mean, we know Bitcoin, it's a scarce immutable asset. It has no counterparty risk. It has no credit risk. It has no operational risk. It's been up for like 10 years straight with no downtime. So no operational risk, no liquidity risk. There's so much liquidity in Bitcoin nowadays. It's a couple of billions per day.
Yeah.
And MSCR, I mean, they don't tick all these boxes, right? We know because it's an equity, it's a company, so that every company has credit risk, has counterparty risks, has operational risks, right?
Yeah.
Key person risk with Michael Saylor and so on. So it's a different kind of asset. But that being said, of course, because they hold so much Bitcoin, it's an indirect play on Bitcoin. But yeah,
Wouldn't be
I'd
the
say, yeah, you should know
yeah.
what you own. Even as the Swiss National Bank, you should know what you own. And probably in a portfolio context, I'd assume that MSCR behaves a bit differently than like pure Bitcoin exposure. You know?
Yeah, now that we talk about that we mention equities, it's very hard to kind of know where are we going to be headed next in terms of market, and the equities are behaving totally different, I would say, than digital assets, since the both asset classes are risk on. So why do you think, like, can we say that maybe equities are, like especially AI Ouroboros, is eating liquidity out of the Bitcoin market and also digital asset market? We've seen all the amazing news surrounding Bitcoin. The demand is here. Institutions are gobbling up, although at a lower pace than they did. But also at the same time, we have a contrarian macro policy. At the same time, we have like a bullish forces at one hand, which is rate cuts and also the end of QT. But on the other hand, we have an unemployment spiking up. We have like liquidity stress. What's in your opinion? Like, give me a very short answer in a couple of sentences. What's your opinion on what's sucking out the liquidity out of digital asset markets and why Bitcoin is underperforming other risk-on assets?
I think I've talked too much already. I think Julian wanted to say something about the Swiss National Bank. He's like its rich
Yeah, we're going to
national.
loop around again
It is,
to that.
yeah.
That's okay. I have a few things to say about that. It's a very interesting topic. But on that one, on the liquidity and why Bitcoin, I agree. Bitcoin should do very well, right? And people are asking all the time, like, what is Bitcoin doing? It went from 125K all-time high back to around 100K while gold was performing and while other equities were performing, because this liquidity needs to go somewhere. And not only the US, as was mentioned, but also the EU and all the central banks are printing like crazy. And it's not going to stop. The rates are even falling, which is, just unprecedented. I think the US is adding around 1 trillion in debt every quarter. So it's insane, right?
Yeah.
The economy is flooded by money and it needs to go somewhere, and it should go to gold, equities, real estate, but also Bitcoin. I think one of the interesting ideas I've read lately on why this is, there are of course different factors. One is Bitcoin is still very immature asset, so it's not going to be perfectly following, like, it's of course gold with thousands of years of tradition is following these liquidity injections much more closely, and the correlations with equities, etc., is much more given, because every marketplace participant is basically defining what gold is and is understanding what gold is as a hedge against inflation. It's, all that. Whereas Bitcoin is not widely understood as digital gold yet, right? There's still a lot of retail sentiment that goes into it. There's a lot of speculation that goes into it. So it's not yet the perfect asset as we understand it as. I think 90% of the market participants don't understand it as that. But and there are other factors. One big one as well is that I recently read about, I really subscribe to, is that Bitcoin is going through its IPO moment. So if you look at big tech stocks that went IPO, was a big early investors that held it for a long time until it went IPO. They made a lot of money and then they distributed their shares into the market. So that meant every big corporation, then IPO startups like Meta, Google, Amazon, they basically performed well at the IPO, but then for 2 years, they didn't do a lot because the shares were distributed and there was the liquidity to pick it up. And only then, after 2-3 years, they kept growing a lot, of course, again, multiples from the price. And I think something like that happens to Bitcoin now, because now there is this whole institutional liquidity that has not been there for the last 15 years. As a Bitcoin OG who held for 10, 15 years now, who's made billions on the paper, but couldn't really realize it because there was not BlackRock with more than 100 billion asset under management that would that had the liquidity. The market was not ready. And we recently saw a 9 billion sell order on Galaxy Digital, right? So Bitcoin OG just sold 9 billion worth of Bitcoin, and that's now possible. I saw a chart in the last 30 days. 400,000 Bitcoin were sold by long-term holders. So people that held the Bitcoin for more than 10 years. So I think it's now the time for these long-term holders to liquidate their Bitcoin and realize their gains without moving the market. And that's what a lot of them are doing. That's why, and it's actually surprising and impressive that still, despite of that fact, Bitcoin is holding above 100K. So I think what we will see once this liquidation and IPO moment is over in a few months, maybe already, or like somewhere next year, that, because the buying pressure is still here from both institutionals and retail. And so it's only a matter of time until Bitcoin will get back up again. And long term, it will always follow the monetary debasement, and it will long term also outperform gold, in my opinion.
Yeah, thank you, Julian, for the clarification. I have a perfect question from Theo regarding now that you mentioned the Bitcoin IPO. So Theo asked both you and André, do you buy the silent IPO framing for Bitcoin's current redistribution from whales to institutions? And do you see it as a primary driver of recent underperformance? How long Do you expect this OG to institutional ownership transfer to cap upside before ETF inflows fully absorb the overhang? It's
Yes,
quite a
I
complex
do.
question, but
I
quite
do.
relevant.
I do believe that this is what is happening, just because of the on-chain data. I mean, we can clearly see the Bitcoin. Most of the selling volume is coming from addresses that held the Bitcoin for 10 or 15 years. So it's clear. That's clearly what's happening. So again, 400,000 Bitcoin is a lot. It's a lot, right? It's what, 2% of the global supply that was in the last 30 or 60 days was sold by very, very long-term holders. So clearly this is the trend. Now, how long this is going on, of course, no one has the crystal ball. No one knows. Not all of these OGs want to sell. Many still want to keep big parts of their Bitcoin. Many want to get liquidity through lending instead of through selling. That's also now widely and institutionally available. You can use your Bitcoin as collateral and get out a loan for getting liquidity. You don't need to sell. Still, of course, many will sell. The question is, how many are there? I think there are a few million Bitcoin, maybe 2-3 million Bitcoin. I'm not sure. We would need to check the on-chain data on how many Bitcoin are on addresses that have not been moved for 10 years or longer. I think there's a few million. So if this IPO moment could go on for quite a while, and many more hundreds of thousands of Bitcoin could be sold in the next few months and years. Question is also about the timeline. But I think now it is a perfect moment for these OGs to cash out, because there's this liquidity and because actually there's the monetary debasement, the interest rate going down. So Bitcoin should go up. That means there's a lot of buy volume there for them to sell. So I don't think this will last like for a long time. I would say probably another 6 to 9 max, absolute max 12 months. I would say more 6 to 9 months, and then somewhere to the end of next year, we will see the selling pressure lowered,
Sellers
and the
exhaustion,
buying pressure is still there because the fundamentals haven't changed, right? Bitcoin is on an upside trend long term, and so I think next year could be quite explosive again in terms of
Just
price.
so as you know, I'm in New York, and I've been there for the last 10 days. And just back to what you just said, Julian, about Bitcoin as digital gold, I don't fully agree with you on this. I think that now, Bitcoin, digital gold, for most of people, of course, the vast majority of investors are not seeing, Bitcoin still as digital gold, but things are improving a lot. And I would say that now that the Bitcoin, especially with ETFs and more financial products and TradFi products are here, Bitcoin is in competition with all of the other asset class. And this is why, it's a little bit harder to get traction. And I had some really good conversation with banks, with funds. And okay, now they see Bitcoin as an investment, an asset class, but they want to offer the wide range of services. And so it's not only about Bitcoin, it's more, okay, we have also equities, we have also Ethereum, we have private equity, we have real estate. So it's now more complicated for Bitcoin to emerge. But you also mentioned that, okay, if you have a real fiat collapsed, things will change. But I think that for the next 5 or 10 years, Bitcoin will need to compete with other asset class.
You know what's interesting about this topic, like Bitcoin versus other asset classes? I think it's still so much more attractive because, for retail, like crypto native retail who has been investing into Bitcoin and crypto assets in general, like the return prospects are probably not that attractive like 5 years ago, right? But still, we're looking at like 30 to 40% CAGR, right? Our official prediction is 30% CAGR over the next 10 years. Now, for a retail guy, it's probably boring, right? But for an institutional guy, 30% is quite juicy because if you look at the S&P 500, right, what's the expected return over the next 10 years? It's 3% in nominal terms, right? 3%. That if you factor in inflation over the next 10 years, it's probably going to be between 2 and 3% as well, at least, right? By minimum. So, and that's just the official inflation rate, right? So you're looking at essentially like a flat real return, right? Just capital preservation at best, even US equities, because valuations are already so high. And bonds, like who wants to lend money to like the UK government over the next 10 years? Who wants to lend money to the US government over the next 10, 20, 30 years,
I mean,
right? Like the
many
expected
people,
return in normal terms
yeah,
4% on the 10-year yield, right? Which is also
yeah,
not
no,
that much. So I think Bitcoin's very attractive in that context, you know.
yeah, sure. But once again, on this, I think that we are a little bit biased because we are all in this space for quite a while. But once again, it's interesting to see that even if you have all, I would say, the red flags, I mean, people are still really committed to, English, French, German, US debt. And they know that, they can still get at least a secured yield for this. So once again, it's more, okay, do you really want to take risk? In this case, okay, you can go full on crypto and then Bitcoin, but a lot of investors just want to protect their capital, and they think that in the short term, okay, you just want to have, national bonds, which is to me not the best thing to do.
No.
Yeah, I think Bitcoin is more
Yeah.
like a long duration asset. Right, we know it's still highly volatile. Ethereum's highly
Yeah.
volatile, right? Bitcoin has a realized fall of like 30, 40%, Ethereum even higher, 50 plus realized fall, right? But at the same time, we know, like, in terms of holding period, no investor has ever been underwater after like 3 years, right? So like the recovery is very sharp. And so like if you compared this with the Nasdaq, for instance, if you invested at like the dot-com peak 1999 and you experienced this kind of market crash, so how many years do you think you had been underwater? 13 years, 13 years to just break even again after like the dot-com crash. Even if you bought like at the worst moment in time, if you bought Bitcoin at the worst moment in time, like at the peak in 2022, like
You
you would
still
have
made profit.
recovered your money like after like 2.5 years already. So
Yeah.
like the recovery periods, like the drawdown periods, they are sharp, right? But still they're not like as long as like traditional assets. And comparing it to alternative assets as well, like private equity, infrastructure, and so on. I think the beauty about the asset class is it's an alternative asset, right? It's uncorrelated, especially to treasury bonds. Bitcoin's less correlated to treasury bonds than gold. It's a better hedge for treasury bonds than gold. Plus, it's a liquid asset, right? Most of these alternative asset classes, like infrastructure, PE, they have a lockup period, right? You can't do anything with your money, right? Locked up for a couple of years, at least 5 to 7 years, right? So you can't do anything with it. It's illiquid. And here you're looking at a new asset class that's relatively uncorrelated, offers lots of alpha, lots of outperformance compared to traditional assets, which is also liquid.
Yeah.
And that's, I
But
think,
it
what's
also
attractive.
depends highly on the investor's timeframes. Like if you are wishing to cash out very quickly, you might be negatively surprised. So, but if you zoom out quite enough, like of course, Bitcoin beats all the assets that we aforementioned today. Now let's circle back a little bit about on-chain data. I have a very nice question from Fabrice. So Fabrice said, is on-chain data showing that Bitcoin OGs are really cashing out, or simply transforming or reallocating their Bitcoin to ETF, to ETFs because of the custody burden, out of their out of their shoulders, and in tap to front round possibly potential regulation. I think, André, this is a good question for you.
Yeah, I mean, we've seen these cases where Bitcoin OGs like Annenberg have been funding treasury companies, right, and so on. So it was essentially just a transfer. But that being said, looking at this IPO moment, which I totally agree on, right? Like this thesis that Bitcoin's living through this IPO moment, like the OGs and long-term holders are essentially monetizing these higher prices above 100K, right? And yeah, I think looking at this, if you look at on-chain data, you can clearly see that long-term holders are not only transferring money, they're literally profit taking, right? But as you mentioned, Julian, like at the same time, institutional investors like ETPs, global Bitcoin ETPs, and also treasury companies, they've been absorbing some of this supply, not like the majority, but there's been like a structural bid on the market by these new players, i.e. ETFs and treasury companies that have absorbed around 33% of this long-term holder distribution / profit taking. So it's been happening. It's not just Adam Back transferring money to a new treasury company and seeding a new treasury company or others, right? But it's also been, or Tether, like transferring money to treasury company.
Yeah.
But it's also been like, yeah, real profit taking. And I think there are like economic reasons and there are also like psychological reasons, maybe because of the fact that we moved above 100K, right? It could be a psychological reason,
And who
economic
wouldn't
reason.
want
They
to
just want to
cash out a
monetize, buy a
couple
house or
billions very
something.
quickly? Yeah.
But the key takeaway from this chart, so on the left-hand side, you can see how much long these ETFs and DATs, digital asset treasury
Yeah.
companies, which is essentially MicroStrategy, right, have been
Yeah.
absorbing, how much they've been absorbing, and they've absorbed around 33%. So not even half, but it's been like a structural, consistent bid, like a flaw on the market.
Yeah.
And I mean,
Now that
I also agree with Julian. I mean, the fact that we consolidated despite like this huge distribution of coins is quite remarkable. And I
Yeah.
think you asked the question about liquidity and that liquidity has to flow somewhere. But we've also included this kind of, it's probably like the most hated chart right now.
Yeah.
But like we've also included
Just
like global money supply versus Bitcoin, and it's been
yeah.
diverging, right? It's been
I
diverging
just
from
wanna
this relationship,
yeah. Thank you, André,
right?
for your answer.
And
I just want to circle back to Julian real
yeah,
quickly. So to ask him about the Bitcoin adoption in Switzerland. So we have seen that Swiss National Bank is actually quite extensively is allocating to MicroStrategy, also to tech stocks, especially NVIDIA. So I wanna hear from you. Do you see like an increase in volume inside of the Relai app as a proxy of Bitcoin adoption in Switzerland and in Europe, in broader Europe? And also, did you have a sudden spike in volume when you obtained a MiCA license? How does this help for institutional adoption in Europe?
I think we need to really differentiate between the institutional adoption and the retail adoption. They have, in my opinion, in the last few years really diverged. They're really two different types of investors. The institutionals are really rational. They have now understood Bitcoin and its properties, and they are, as André said, structurally bidding for it. They're allocating a few percent of their portfolios just because it makes sense, just because they understood it's the best asset in the world. They also have analyzed the last 10, 15 years and how it behaves, etc. And they use all these KPIs. Whereas retail is very sentiment driven. They want to multiply their money. And so that's why they are kind of passive at the moment, because they feel like, oh, I've missed the trade. They don't believe that Bitcoin can go to 1 million from here. They thought, oh, I should have invested before it's 100K. Now it's more than 100K. It's too expensive. Also, I cannot buy one full Bitcoin. I'd rather invest in something like Ripple, where I still can buy a lot of units, even though it doesn't make any sense, because for Bitcoin, there's
Unit
21
buys,
million.
yeah.
And for XRP, there are 100 billion units. So even though you can buy more units, it doesn't make sense from a value perspective. But that's how retail investors think. So we see the retail sentiment being relatively passive. Still, we are seeing growth. We have seen growth this year, more volume, more people buying. The adoption is continuing, but not explosively at the moment. And I think this will come back. It just takes time for retail investors to get used to a new price level, right? When Bitcoin was 1K, no one believed it's going to go to 10K. Then it went to 10K, and it took some time until people believed it can go to 100K. Now it went to 100K. It will take some time for people to just get used to this new normal, and then it will go to 1 million, and it can go really quickly then once retail comes back. But because actually the price is major, like the explosive hype cycles and price movements of 50, 100%, whatever in short time, these are driven by retail. These are driven by FOMO, as not driven by institutional. So now we will get at one point this explosive combination between the structural bidding, as André mentioned it, from institutionals. That's going to go on just because of rational reasons. And then, but at one point also retail will come back and FOMO in, and bid explosively. They will bid much higher on exchanges like Coinbase,
I
Binance,
wanna,
Relay as well. And
Right.
so this will
yeah.
be quite explosive.
I want to ask you. I want to ask you a quick follow up on this. Do you see like demand levels fluctuating regarding your services at Relay that matches the price fluctuation, or have you ever received a like kind of the market push to introduce altcoins inside of the Relay app as well?
Yeah, both, yes. So I mean, the Bitcoin volatility and price ups and downs is basically the best indicator for our volume. Interestingly, when price goes up, we see like FOMO buying and also many new users coming in, because that's what triggers retail investors. That's what makes them, like, they read articles, oh, Bitcoin's a new all-time high, and they search for a Bitcoin on Google and they download an app and like Relay, and they buy. So we see more volume driven by FOMO, but also much more new users. When price goes down, existing users buy more because they buy the dip. They have understood Bitcoin, they want to accumulate, and they see it as a discount to get into the market, so they buy more. That's actually where we see the biggest spikes in volume when price goes down. Not many new users, because they're like, oh no, I'm not going to touch this shit, right? But existing users who have understood Bitcoin for the long run, they are buying mass. The worst
That was
thing,
my question for you, actually. I wanted to ask whether like Relay users actually buy more because you can see all the order flow. And that was also my impression from on-chain data or recently. Into the drawdown, we've seen like accumulation by these small wallets,
yes,
right?
yes.
And I think it's like retail buying the dip.
Absolutely, 100%. That's what we're seeing. We have days when Bitcoin price goes down 5% or 10% in a day. We have like 3-4x the volume as to a usual day, and that's 90% buy orders, and that's almost all of our users are retail investors. So 100%, that's what's happening.
Nice. So
And on
because we are,
altcoins,
yeah, okay.
on the altcoin question, yes, we do have some people who are asking for altcoins. Usually what we're seeing is there's a newcomer. 90% of Europeans are not into Bitcoin or altcoins yet, right? They're not into crypto yet. So then they come in, they buy Bitcoin. That's always the first step. That's the gateway drug, right? They buy Bitcoin, they understand Bitcoin, but then also they understand what else is in the market. They look at altcoins and they get excited because, again, mainly retail investors are driven by making a quick buck short term. So they're looking at, oh, there's Ripple, there's Solana, there's Cardano, whatever. They try this out while still having a savings plan on Bit and accumulating Bitcoin on Relay, but still they go to Coinbase or Bitpanda, Binance, and they try different stuff. But they, at one point, they get burned, and they learn that long term, everything trends downwards against Bitcoin. If you look at every altcoin over a 5-year chart, it's losing value massively against Bitcoin. So that's what a lot of these people then understand. So they basically decrease again their allocation to altcoin speculation and increase their allocation to Bitcoin long-term accumulation.
Yeah. Now that you mentioned that everything's trending down to Bitcoin, I want you to be super brief, like both of you, and also Raf. I want you to give me your opinion on where are we headed next in terms of Bitcoin dominance. I think this chart is like very, very popular in the community and in inside of the investors community. So is there room for altcoins, or are we headed above 60% going into the year's close? And also then we will proceed into Q&A block. We have 3 very good questions. André, you can go first.
I think that chart, that's probably like a weekly chart, because I think in October, during the October sell-off, it went to 63% briefly, right? Because all the other altcoins, they sold off even more, right, during this liquidation event. But I think, I mean, if you believe that there will be a return risk appetite because of liquidity, this distribution of long-term holders will go away or fade, at least gradually over time as we move into 2026, then a natural consequence would be that altcoins tend to outperform Bitcoin in a kind of risk appetite move, right? With higher risk.
So
risk
you still
appetite will
subscribe
also
to
like
that
altcoins.
opinion?
But I don't have like a high conviction, right? Because
Okay.
we've seen like 20 was like consolidation year, Bitcoin dominance moved up. But I could imagine that, especially with like new ETFs coming online, especially in the US because of these generic
Yeah.
listing standards. So they have like a new avenue. There's a new channel for capital to move into altcoins. It could be some catalyst, right, for an alt season. But like, to be very fair, like these alt seasons, they tend to be very short-lived.
Yeah.
And to Julian's point, there are actually only a handful of like major crypto assets, major altcoins that have managed to outperform Bitcoin, right? Most altcoins, they
But
tend to
if you have to
structurally
put,
underperform,
yeah,
right?
sorry
But
to
only
interrupt
like
you, but
outperform on a
Yep.
very short period.
yeah, Andre, sorry to interrupt you, but if you have to put your 2 cents, where would you see Bitcoin dominance? Above 60% or below it going into the year's end? Like, of course, no financial advice,
So
guys.
the best prediction is always the current
Yeah.
dominance. I'd say 60% more or less.
Okay.
I think there
Okay.
will be periods of outperform because of rising risk appetite,
Yeah.
but then will mean revert because these alt seasons, they just tend to be
Yeah.
short-lived.
Raf, what about you?
Yep.
Have you seen any
So
insights in New York?
yeah, sure. No, I agree with André. I just have one thing to add about altcoins. So once again, I had really good conversations with this time crypto projects in New York. And the interesting thing is that, as you know, before the Trump election, it was just impossible to issue a token and just to trade easily tokens in the US. You saw that Coinbase bought Echo, and now they want to launch an ICO platform. So some people think that because in the US it will be easier to issue a token, to launch something, maybe the altcoin season, but I'm not sure, will be driven by a new wave of innovation and token issuance in the US with all the cash that they have. So I would go for Bitcoin dominance going up in 2026, but just, let's be focused on what's happening in the US, especially with new tokens.
Julian, your take. Are you super bullish on Bitcoin dominance?
I am, of course. I agree to what André said pretty much. Are always altcoins. There will altcoin seasons. There will always be because there are a few retail investors and the retail sentiment is looking for the short gain. But long term, if you look at every 5-year chart or even 10-year chart, Bitcoin is always rising and reaching new all-time highs, while most of these altcoins have not reached for now their last all-time highs. So if you compare to Bitcoin, or if you're calculating in Bitcoin terms, these altcoins are not going up. In Bitcoin terms, pretty much everything is going down on the 5+ year chart. And so, of course, there will be short altcoin seasons, but very hard to make money on them, to be honest. You need to be very experienced trader. So I would not recommend this almost to anyone.
Thank you. Thank you so much for the answer. So basically, we are super bullish on Bitcoin dominance, at least for next year and foreseeable future. Okay, so we can proceed to Q&A block. We have two very kind of questions that support each other. Basically, Robert asked, is the 4-year cycle still valid or dead? So do you guys subscribe to the idea that we are in a 4-year cycle or we are in an elongated cycle? André?
I think the 4-year cycle is dead, right? Because, the 4-year cycle is based on the notion that there's a significant performance effect of the halving, right? And I think this halving effect has become smaller and smaller over time. If you consider the very first halving in 2012, like the supply shock, right? The supply deficit induced by the halving, where it went from like the block reward went from 50 Bitcoin to 25, right? So it halved. So there was a deficit of 25 Bitcoins every 10 minutes. That was in absolute terms like quite a supply shock, right, at that time. And also in relative terms, relative to the existing supply and circulation, which I think it was around, it was about 10%, right, per year, that supply deficit. But like, if you compare this to the latest halving in 2024, that supply deficit was less than 1%. Because like most of the Bitcoins are already mined, right? Almost 20 million Bitcoins are already in circulation. There's only 1 million Bitcoins to be mined, right? That effect has become smaller and smaller over time. And at the same time, you see institutional adoption is picking up, institutional demand is picking up. if you just look at corporate treasury companies, Bitcoin treasury companies, and ETPs, Bitcoin ETPs, they're close to 1 million Bitcoins this year. Like just new demand, 1 million. It's a new record high. It's even higher than 2024. And it's like 7 times bigger than the halving effect.
Oh, yeah.
So yeah, I think like this effect's diminishing, and the implication is Bitcoin is becoming a macro asset, right? It's becoming more integrated to like the traditional financial system because of institutions, and it's becoming more sensitive to these macro cycles.
Yes. Now this perfectly responds to Nat that actually asked as well, do you believe in Fourier cycle? And now you showed us your reason why the Fourier cycle is dead. How much did ETFs contribute to that?
I mean, ETFs, they tend to guide, like the flows tend to gyrate with the macro cycle, but there's like a structural and a cyclical element, right, in these flows. So that we have institutional adoption, structural adoption, right, because pension funds, asset allocators, they do strategic allocations. They say like they go from 0%, for instance, to 3% of the portfolio set. And this is happening as we speak, right? Increasingly more adoption by fund managers, asset managers, institutions in general. So this is a structural element, and that's like the structural bit that keeps increasing, right? The cumulative flows, they're actually quite consistent. They're consistently going up, right? But nonetheless, there's a cyclical element as well, which is like probably like the order flow you see on Relai. At least some of it, like during, it's also quite pro-cyclical. These ETP flows tend to be quite pro-cyclical. So in like downturns, you see net outflows, and upturns, you see net inflows, especially during the April tariff shock, we've seen net outflows, right? But on a structural basis, you still see this kind of.
That's the most important thing, is that over time, cumulative flows are trending up. So Nat, you can look at all ETF cumulative flows, and you will see that the chart is actually all nearly parabolic since the introduction of ETFs from January 2024. And before we wrap up, we have one more question from Henry. Do you think the stablecoin massive growth will benefit at some time Bitcoin, as well as it benefits US debt, and or maybe they will just continue financing US bonds? Julian, can you provide your answer to that?
Yeah, it was interesting lately where Kathy Wood from ARK did you see that? She's adjusting her bullish case from 1.5 to 1.2 million, I think, because of the traction of stablecoins. I disagree with that. I think like gold and Bitcoin kind of are in the same teams, are stablecoins and Bitcoin are in the same team. They're about adoption of people in digital peer-to-peer way of using money. And also it's like a gateway drug. Again, I think stablecoins are a gateway drug from the fiat system, the very fragmented banking financial system, to Bitcoin. It's just harder for people to grasp the concept of Bitcoin. It's much easier to understand, and that's why the adoption of stablecoin is now so high, especially in emerging markets. It's much easier to understand, oh, it's $1, which is relative to my peso or my local currency that is crazy, like devaluing like crazy. This is easy to understand because, oh, it's dollars, it's stable, and I can use it 24/7, borderless, peer-to-peer without any counterparty risk, cannot be censored, etc. I can, but less. So that's much easier to understand. That's why it's adopted as a means of store of value, but also transaction. And then the next thing people will understand is that actually Bitcoin is the much better store of value and can also be used as medium of exchange. It's just more volatile. So I think what we will see in the next 5 to 10 years is an adoption of stable coins as medium of exchange to use for paying things and more as payments, and then Bitcoin as a store of value.
Okay.
So that's also what you're seeing in the patterns of Tether, right? They have extreme success with their stable coins, and they themselves invest and promote massive Bitcoin. So I think these two go hand in hand.
So Bitcoin is like a black hole, the final station, liquidity will move from stable coins into the Bitcoin at the end of the day. Okay,
exactly.
Thank you very much. Yeah, thank you very much, Julian. Thank you very much, André, Raph, for this discussion. Now that we are a little bit off the mark, I hope guys in the audience don't mind, but I had a very nice time discussing with you all of these recent trends, and also thank you so much for participating. Thank you guys for joining us for this Market Call Live. And also you can check the replay on our Big Whales YouTube channel. Thanks once again to Bitwise for sponsoring this video. And we will be back in December, most likely December 10th, so with another banger of episode. So thank you guys once again, and see you next time.
Thank you,
Bye-bye.
Thanks, guys.
Have a
Keep
great day.
stacking.
Yeah.
Thank you.
Bye.